If you're listening to the media this week, or watching the news, or listening to the news, then you'll have seen or heard all the sort of drama around the government's announcements this week about the changes to national insurance in particular. It was one that was talked about, I think, during the course of last week and due to be announced on, like, it was Tuesday this week. Um, and a lot of that, I mean, it's all to do with the shortfall of funding for social care for everybody's future in relation to what your needs might be whenever you're elderly. And there seems to there's been a crisis in that sector for quite a long time. But setting all of that drama and political stuff aside, because that's essentially what it is, what we do need to consider now is what is the financial impact of what has been announced. How big or significant is it? And what can you actually do to make any changes around that as an employer or as a business owner? And my focus is always to be what can you do, what action can you take, what planning can be done, what measures can be put in place to mitigate this or just to plan forward for it. And there's a number of things come to mind. So first of all, let's focus on the national insurance side of it. The announcement is that there is an increase in national insurance contributions from April 22, up by 1.25%, and that's applicable for employers and employees. Now, I think there's a lot of an emotional reaction to some of that as well, because a lot of businesses and a lot of employers will feel that employees were supported quite well through the pandemic, through the job retention scheme and so on. But some employers and some businesses in particular weren't fully supported in many regards. But I think you have to set that aside, because the changes are announced and changes are made. They're going to be voted through, I would imagine, and it's going to happen. And if it's funds that's going to be set aside for social care for the future, then so be it, if that's what's needed. So you've got to just accept, I think, first of all, that it's happening. Secondly, you've got to plan forward a wee bit around that. So what can you do around those national insurance changes? Just before I go into those changes, I want to just mention as well that it's an increase in national insurance of 1.25% from April 22 for 1 year. The change happens then 12 months later, where it's going to be not a national insurance increase. They'll take that 1.25%. I think they're going to drop that back down again, but instead replace it with a separate thing on a payslip called, I would imagine, social care levy. I don't think they've got the name for it yet, but it's going to be a separate levy on somebody's payslip. It means the amount of money that's taken off them is going to be the same. So they'll pay an extra 1.25% national insurance for a year. I think that'll drop down again, but they'll pay a separate 1.25%, just calling it something else. So it's going to work out that the money going into your own pocket as an employee is going down a little bit, and the amount of money you have to contribute as an employer is going up a little bit, but it's going to be the same amounts in total. So what can you do to change any of that? Can you change anything? And what else can you do? Well, first piece of action is plan forward. I'm constantly talking about the need to plan forward and to budget and to forecast. You need to be doing that in your business now that you know that change is coming, because that's going to be an increase in your employment costs. So plan forward in your business to see what way that makes your business look with that change coming. And as costs like that are increasing, you've also got to plan forward for what changes do you need to make in your business to be able to sustain that. So are you going to try and get more customers or clients? Are you going to try and increase your turnover? And if you're going to do that, how are you going to do it? Is it going to be more customers and clients? Is it going to be a change to your pricing? Is it going to be a change to the products and services that you're selling? Plan forward along those lines, I think, is a much more proactive, positive and energetic way to get ready for those changes, because they are coming. But secondly, there might be some actual mechanisms that can be employed to actually mitigate this change. So a couple of things around the national insurance side of it is, what can you do to maybe change the gross salaries of employees? Obviously, I'm not talking about pay drops here, but salary sacrifice is an option. So if you can offer your employees certain benefits that are tax efficient, and offer them across the board and roll that kind of change out. Then salary sacrifice as an option means that the employee gets the same level of benefit. They mightn't get the same amount of money, but they get the same level of benefit. And that salary sacrifice is something that comes off their gross salary. Therefore, it's a saving on national insurance for both the employer and the employee. Now, that's the same today as it will be whenever this national insurance rise comes in. But with the national insurance rise coming in, it's certainly worth looking at. The most obvious one is pension contributions. So because you're currently, if you're an employer and you're operating an auto-enrollment pension scheme, then you might be looking to change that from April 22 to be a salary sacrifice pension scheme. That means, let's say, for example, the employee normally pays £100 a month out of their salary based on their level of earnings and based on their rate of contribution. Then you could opt to change the nature of the pension scheme, and instead of the employee paying that, you take the £100 off their gross salary, and then the employer pays the £100 across instead of the employee. But it means it's not costing the employer any more money, and the employee is getting the same amount of net pay, essentially. That's roughly speaking how it would work. Now, a couple of things to bear in mind around that. You do need to take some pension advice, and I'm not a pension advisor in relation to all the ins and outs of that, because there's pros and cons and everything that needs to be considered. And it's a change probably to employment terms and conditions, so employment contracts might have to be drawn up differently to be able to enact something like that. So there's pros and cons with every change, folks, that you make, especially in relation to your business and especially in relation to your staff and employees and so on. So take a good bit of advice, look at all the pros and cons, and work out some of the numbers and see what way that would work for you. So there's a couple of things you could do to mitigate that. Second thing I want to mention as well is the sneaky announcement in relation to a change to dividend tax. I don't know if anybody foreseen that coming, an extra 1.25% on dividends, so that I think the basic rate of dividend tax goes up from 7.5 to 8.75, and so on as well for higher rate tax payers in relation to the level of tax they pay on their dividends. It's all up by 1.25%. I have to say that one probably does stick a wee bit with small companies who do, as business owners, have a mix of salary and dividends to extract profits to keep their household and family going, and to give them their income to pay their bills. And a lot of people don't kind of see it like that. I think a lot of people, I think, have a conception that business owners are rich, and that's certainly not the case for the vast majority of small business owners. They are they're constantly turning the wheel. They're working all sorts of hours. They're working hard. They're putting a lot of effort on, and I think they are they are seeing a lot less reward for a lot of their efforts, especially when taxes like this come in, and especially when directors and small limited companies didn't get a lot of support for the directors during the coronavirus pandemic. It probably does stick in people's throats a little bit. It's not much either. It's only 1.25%, but at the same time it is a cost increase, which means it is going to affect the amount of income business owners of small companies in particular are going to have. Can you do anything to mitigate that? I don't think there's much can be done unless they change dividend allowances, which it's highly unlikely they're going to do that now. And I think just a wee bit of planning around the timing of dividends is possibly all that can be done. But look, if you're in that situation where you've got a mixture of salary and dividends, then you could speak to your advisors, speak to us. We can run a calculation to show you what the tax impact is. If it's not significant, then you just need to change your personal budgets accordingly and move forward from there. But as always, a little bit of planning and forecasting to give you peace of mind, I think, is a massive advantage. So consider doing that at the very least. It's always better knowing in advance and hearing it and maybe seeing it in black and white. Then you know what you're dealing with, and then you can, I think, either accept it a lot easier or plan to change a few other things around that that might help. So hopefully that's useful bit of information to share on the changes this week. And if there's anything that we can do, or you'd like to speak to us about some of those changes and how to impact you, please, as always, give us a shout. More than happy to have a chat and help.